Jerome Powell admits that the Federal Reserve is between a rock and a hard place, but the market believes that he's going to have to pivot quickly. ETFs rallied massively on Monday, with 294 million in inflows. Are we at the beginning of a new bull market? Let's find out. Welcome to Bitcoin Daily. I'm Dante Cook, head of Swan Business. Jerome Powell says that the economy is more or less in the same place that it was pre-pandemic.
The most recent labor market data do send, to your point, a pretty clear signal that labor market conditions have cooled considerably compared to where they were 2 years ago. This is no longer an overheated economy. This is an economy, as I mentioned in my opening remarks, that is more or less back by most measures to where it was before the pandemic. And that was a strong labor market, but it was not an overheated labor market.
In what way and in what world? Inflation calculated by anyone other than the government is much higher than what they report. Shadowstats.com has their own CPI calculation, which is about double what the government admits. You see, the government CPI excludes things like most forms of insurance, taxes, most forms of healthcare that we need and we pay for, education, and some weird statistical model that they use to come up with the housing number. But literally, if you look at the cost of housing, whether it's rent or it's home prices, you can see that this number is clearly made up. And the government themselves, through their Fred data website, even reports that real household income and personal incomes are lower than they were from the pandemic. So I'm not sure how he can say that with a straight face. But one thing that he is correct on, he iterates in this interview that the government is between a rock and a hard place, and so is the Fed. He says that if the Fed loosens policy, then they're at the risk of destroying any work that they've done to tame inflation. He also said that if it keeps policy too tight for too long, it's at risk of blowing something up in the economy. And you know what? I think he's right. The market seems to be shrugging off Powell's comments because they know that a monetary policy pivot is necessary at this point. Matt Siegel, head of digital assets research at Van Eck, is telling clients and customers that it's almost inevitable that we're reaching the monetary policy pivot point.
What we're telling clients is that inflation's continuing to decelerate. The U.S. economy looks like it's in the midst of a soft landing. The long-awaited pivot in monetary policy looks closer, and we think the election will catalyze fresh all-time highs in Bitcoin as the market starts to price in 4 more years of deficit spending and potentially a friendlier U.S. regulatory backdrop under that Trump administration. So, dollar cost average, this very volatile asset would be our take here.
And that may be one of the reasons why ETFs have rallied the last several days. In fact, yesterday, Monday, there were $294 million worth of inflows, with BlackRock taking in $187 million and Fidelity taking in $62 million. ETF sponsors have long been bullish that the inflows that we saw earlier this year are just the beginning. Listen to what Matt Hogan, Bitwise CIO, has to say about why he's bullish on more inflows in 2024 and even more in 2025.
Are there any estimates about the next few months of the Bitcoin ETF flows, or are we now in the world of we'll just see it as it happens?
I don't know what the flows will be in the second half of the year, but I expect that we'll see an acceleration as those account platforms come on and as the inevitable tailwinds behind crypto right now, which are massive, push us to new all-time high prices. I will also add, I expect 2025 flows to exceed 2024 flows. There are 2 reasons for that. One is these wealth platforms coming on board and the institutional capital unlocking. And the other, again, to point back to data, gold ETFs are the closest analog to this Bitcoin ETF launch. They were enormously successful out of the gate. They were the most successful ETFs ever at the time. And year 2 flows exceeded year 1. Year 3 exceeded year 2.
Really?
Year 4 exceeded year 3, all the way up to year 7. When you open up new asset classes, it's a multi-year phenomenon. So I do think we'll see accelerating flows in 25 and beyond.
I know I say this almost every day, and I sound like a broken record. But despite the short-term price action, the long-term thesis around Bitcoin still remains. So if you live in a place where your elected officials pay McKinsey $4 million to come up with a solution to solve for the trash problem, and all that they come out with is a trash can, buy more Bitcoin. Or if you live in a place where people who are not citizens of your country are allowed to vote on the national election in your country, buy more Bitcoin. If you live in a country where they're recommending a 90% income tax on anyone who makes $400,000 or more, buy more Bitcoin. You're seeing more and more segments on CNBC where people are recommending 2 to 5% of your portfolio in Bitcoin. And soon before long, it's going to be a foregone conclusion. So get in while the opportunity is still here. The train has not left the station yet.
Percentage of gold's market cap should Bitcoin have? What within 5 years?
You know, think about it this way. When you look at the price of Bitcoin, look at the denominator, look at USD. So I'd rather really think about the USD part of Bitcoin over USD than comparing it to gold, because
when you look at what gold's valued at, it's over USD. So it's the same. It's kind of the
same idea. It's just I think when think about what you think about the dollar and think about what you want to replace it with. Gold in its physical form is hard to move around.
That's what I mean. Bitcoin should at least, there's no reason it shouldn't be just 10% or 20% or 30% of gold.
Right.
It should be, and, you know, poor Senator Menendez, I mean, you know, he's like walking around with these gold bars. It's like, oh, I mean, if he had Bitcoin, it would have been right on his...
I think they were hidden. I don't think he was carrying them.
Oh, he wasn't actually carrying them. Or it would have been a lot easier. He'd probably still be, you know... sailing, no problem.
That's right. And actually, cleaning up a lot of these old cases about Silk Road and Mt. Gox, I think, will help. Like that helps just sort of cleanse us all of these kind of old sins, and we can move on with a clearer idea of Bitcoin as being a store of value. And a lot of the ETF holders, I think, feel that way. Also, you know, diversified returns. So the whole asset class presents a lot of opportunities.
So you're a stacker, and you think people ought to keep stacking?
I think people should really consider with their advisors to add 2 to 5% of Bitcoin.
And if you're not bullish enough, we always have more content for you here at Swan. Like today's Swan Signal Live with Vijay Boyapati, author of Bullish Case for Bitcoin, and Swan co-founder Brady Swinton, where they're talking about signals of the upcoming bull market and why we may just be getting started. The link for this show is in the show notes. And with that, we're signing off for today. This is Dante Cook with Swan.com. Happy stacking.